Hello, welcome to Macro Point of View Commodity News, and in today's show we'll take a quick look, on a few markets that's quite interesting in the recent times, and we're gonna take a look what we can expect from today's movement and couple next days movement. So let's roll. For first, we'll start with a crude oil. As we can see, I already marked my point of view as it should be rising, and it's based mostly on a Saudi Arabia decision that the market will still be lack over 1 million barrels from Saudi Arabia as they extend their production cut till end of the year, of course reserving the right to make some amendments every month, but in general we can expect that Saudi Arabia will produce around 9 million barrels per day of oil to end of the year. The same decision was made by Russia when they extend their export cuts of 300,000 barrels per day till end of the year. Of course, with the same right to change that decision in the middle if they want to. Anyway, the problem with oil is that it should be now have strong support on $90, as you can see for the past 3 days. Of course, today we opened under, because it's crude oil Brent, we opened under $90, but we already rise. So I think we can have a movement up to $95 as long as there won't be any kind of recession in the horizon. But with the recession data, what we can expect, well, it should be another slowdown in China, which should be prevented by the government as they still finding new ideas to rise their economy. And I think they will keep continuing this. Maybe even they will stop limiting the steel and other industrial production at the end of the year, what they did for the past 2 years to boost their economy, or that's at least something that should make their economy rising. And yet it shouldn't be anything in the middle next week about what we should be concerned. From data, we will have CPI from United States, we'll have European Central Bank rates decision. Nothing really to worry. We've got some industrial production data from Brazil, from I think it's also Mexico, South Africa. So it should be giving us some guidance how the situation around the world is looking. But it shouldn't be so strong effect. So I think the oil has a nice path to rise for another $4 or $5 for the next week. I couldn't say the same thing for natural gas, as you can see we are still for over 2 months between $2.40 and $3, and well, even $2.80, $2.40, $2.80, that's the main area we are between for the past 2 months, 2.5 months already. So it's really hard to say how it's gonna be, because we are at the end of the hot summer season, so we still have a warmer forecast weather for the next week in the United States, but still this next week and also this week, average production of natural gas in the United States should surpass the demand. So even if we had all the summer adding gas to storages in the United States, it should be boosted now in September. So this is not good news. The other news are what kind of things will happen with LNG terminals in Australia, Westwood Energy and Chevron terminals, as there is still high risk of strikes over there. So this is the huge question mark. Yet the export from United States, it's in September 12.7 BCFD, while they're able to export 14 BCFD. So it's still about 10% lower from their maximum capacity. So even if the LNG problems occur in Australia, the United States should be able, with not much resort, to cover it. So it shouldn't affect so much the price. Yet, as you can see, I don't expect these prices to fall under 240. So this is my point of view, of course, and I'm still bullish for this natural gas. Of course, I know there is some El Nino forecast that the winter in United States will be warmer and drier, so they might not need so much gas for heating and energy production. Yet I think we can still expect something pre-winter rising prices and at least reach $3 for this natural gas contracts. And as well as a gold, I also prepared. Maybe I will take a quick look because we've got some big Fibonacci, and here we've got some small Fibonacci retracement from the top in July to the bottom in August. And now, as you can see, the Fibonacci lines is as I see it, because it's reaching as a maximum level. It's a very good exit point. I'm not saying it's a great point to entry, but it's very good exit point. As you can see, from anything under this $1,895, we've got 1908, reached no problem. Here it stopped the market on 1923, then stopped the market on 1935, and then stopped the market on 1947. Of course, it crossed it. That's great, but yet it's a very good levels for exit strategy. And the same with some droppings, opening from here or somewhere between. You can close here, you can close here. As I said, it's not good for entry point, as if you enter here for the short, you won't be reaching the next level. So as I said, for me Fibonacci is great for exit points, and now I'm thinking that we have a chance to rise this today and after the weekend up to 1935. As you can see, I also put some small arrow here. I will move it a bit so make sure it won't be inside the candle, and I strongly hope that next candle, Monday candle, will be also above it. Yeah, this is my point of view of gold, and there's nothing here. Of course, CPI next week will be crucial for gold because it will be crucial for the United States dollars, so we'll have to take a closer look on it. Yet I think till then we should reach 1935. And we've got wheat fighting with 600 cents per bushel, and it's, for me, very low price. Because of course the world is expecting a huge export from Russia, and it's still good export from Ukraine, no matter the Black Sea deal is off. Of course, this week Turkish president met with Vladimir Putin and said that there is a chance to restore the Black Sea deal, yet the Putin claimed that after the Russian claims will be fulfilled, they will be agreeing for new round of Black Sea deal. So I don't think there will be any changes here, especially that Russia is still attacking the seaports and grain storages, which is of course part of war. Of course, it's not moral, it's not humanity, it's everything wrong with it, as with every war, but let's face it, it's a war. You attack your enemy to make it hit both military and economically. So attacking the grain storages with the grain for export is not something what wasn't seen at wars before. And of course we've got the same, maybe not exactly the same, but kind of similar situation in Yemen, when Saudi Arabia and United States fleets are blocking the food deliveries to Yemen, making some people starving. And what's the difference it is? Well, we are in the Western Hemisphere, so we are on the United States side, so we can criticize things that done by China or Russia, but we should not criticize things done by United States. And that's the main point. Well, I'm independent, so I can criticize and I can tell you about the facts. So the fact is, there is some problem with the fuel for agricultural businesses in Russia, and even their minister said they are lack of fuel to harvest summer crops and to sow winter ones. And it might affect the idea that Russia would be able to export almost 15 million tons of wheat. And please do not remember, we still have an export ban in India, which is bullish. We have some expectations that Australian production will be a little bit over 25 million tons, which is over 30% lower than last season. And they still don't know if the September won't be dry, so they might also cut this forecast even further, which is bullish. India lowered the import tax on wheat, so there might be a situation that India will start import the wheat, as they might expect some dry weather from El Nino for their next season. Please remember that India is harvesting wheat once a year on the beginning of the year, on March, April. So they need good weather then, and then should be the peak moment of El Nino, which would bring dryness. So this is also very bullish, and we once again for another season we have some first warnings about the dryness in Argentina and in Canada, both huge world wheat producers. So there's a lot of things that bullish and only one bearish, which is Russia and Ukraine export. Ukraine is under fire. They're still attacking at least a couple times a week. Every few days they're still attacking some grain silos. So there was less and less goods. Of course, it's not only wheat, it's corn, it's sunflower seeds and things like that. Yet, of course, we've got the situation that we've got only one bullish thing and one bearish thing and many bull things. So this 600 cents per bushel for me is a very cheap price, and I'm really thinking about extending my long position in wheat. Yet I think we still have a chance to rise more, especially that in general we've got a deficit of wheat in the world, about 3 million tons. Of course, next week we'll receive a new crop production and world markets and trade from USDA reports, so there will be a brand new point of view, yet I think it should be more bullish than it is. Thank you very much for your attention. Have a good investments and have a nice weekend ahead of you. See you next week.